Ensuring your business has enough cash to cover operational expenses, pay employees, or invest in growth opportunities is one of the biggest challenges business owners face. Hi everyone! Welcome back to OneCFO's channel. Are you worried about the cash flow of your business? We will share tips and tricks to manage your cash flow effectively. But first, let's discuss what is cash flow. Cash flow is the movement of funds in and out of your business. There are two components of cash flow: cash inflows and cash outflows. Cash inflows represent money coming into a business during a specific period. Simply put, cash flows into your business when you earn money through sales, investments, financing, and other sources of cash. Meanwhile, cash outflows represent the money leaving a business during the same period. Cash flows out when you spend money on your operations, purchase of assets, loan repayments, dividend payments, taxes, and other expenditures. Ideally, businesses should maintain a positive cash flow. This means that the total cash received exceeds the total cash spent. However, sometimes your business can experience a negative cash flow. This happens when the total cash outflows exceed the total cash inflows. You may not have enough cash on hand to cover immediate operating expenses, bills, debt obligations, or other financial commitments. To avoid periods of negative cash flow, businesses need to improve their cash flow management. Here's what you can do. First, understand your financial status. Track cash inflow and outflow with an automated bookkeeping system so you stay up to date with your cash balances and provide data in preparing financial reports such as a cash flow statement. Businesses need a cash flow statement as it offers transparency on where cash is coming from and where it's going. It also helps assess the business's liquidity and aids in budgeting and financial planning. Cash flow management becomes easier with an automated bookkeeping system. Setting up an automated bookkeeping system reduces the risk of human errors and lets you see the cash flow quickly and accurately. It provides real-time visibility into income, expenses, and cash balances. Next, do cash flow forecasting. Cash flow forecasting lets you predict the movement of your money in a future time frame. This will show you any cash shortages or surpluses you will have along the different cycles in your business. To be able to do a proper cash flow forecasting, you need to list all possible income and expenditures using historical data. Include both fixed and variable costs when forecasting future expenses. Factor in business' sales peak and low seasons to project working capital needs. Consider also the payment behavior of customers. Knowing how and when customers pay allows business owners to adjust cash flow management strategies accordingly. Another way to have a steady cash inflow is to improve payment collection strategy. Here are some tips to achieve this. Review current invoice payment terms. Offer discounts or promos. Come up with a down payment scheme, especially for bigger projects. Provide multiple payment options such as bank transfer, GCash, or Maya payments, and credit cards to make it easy for customers to send payments. Set up automatic billing and reminders of unpaid invoices so you can give timely notice to your customers. Keep a positive cash flow too by negotiating with suppliers and vendors. Discuss changes in the frequency of payment, deadline dates, or installment payment options so you do not need to use available funds to pay for expenses immediately. Automate payment schedules and set deadline alerts to avoid missing out on budgeting for specific expenditures. Our next tip is to manage inventory wisely. When you buy inventory, your money becomes tied up until you sell these goods and convert them back to cash. A problem in your cash flow arises when you fail to sell your inventory immediately. You should have a proper inventory management system to prevent cash flow issues. Start by automating your inventory management system. Also, establish proper communication between the finance and supply teams to determine the optimal inventory level. Another essential tip in managing cash flow is to price your products right. Set a certain percentage of profit you want to make per item. Compute the cost of goods sold and conduct market research. If you want to learn more about pricing your product or service properly, we have a blog on the 7 key factors to consider for your pricing strategy. Businesses experiencing cash shortages need immediate measures, so financial assistance options can be the solution. Explore borrowing to bridge temporary gaps. A business line of credit with banks is handy if you need short-term funds. Borrowing is more accessible through online lending services, but consider that short-term funding may have higher interest rates. Build a cash reserve so you have a readily available cash. Ideally, an emergency fund should cover at least 3 to 6 months of expenses. Also, having a cash reserve minimizes the need to borrow at high interest rates. Lastly, review cash flow regularly. You may review pricing and marketing strategies to stay current and know which ones generate revenue. Also, re-evaluate the budget and see if you need additional working capital. Proper cash flow management is crucial for small businesses' financial health and longevity. Implement the strategies we shared in this video to ensure a steady and sustainable cash flow. If you enjoyed this video, like, share, and subscribe to stay updated with the more empowering content. This is once again a video presented to you by OneCFO, your partner in growth.